Hello, everyone. I'd like to welcome you to today's webinar. We are here with Binary Stream, where we're going to learn about their comprehensive subscription billing suite. We certainly appreciate you taking the time out of your schedule to join us today. I'd like to go over just a couple quick housekeeping items before we get started. All attendees are in listen-only mode. If you do have any questions throughout the presentation, and we certainly do encourage that, please submit them through the GoToWebinar question box, and we will bring them up if we can during the session. And if not, we certainly will be answering questions right after the presentation. We are also recording today's session, and everyone will receive a copy of this in a follow-up email tomorrow. So I'd like to introduce our speakers. We've got Justin McCool, who's a partner account manager, and Don Ramsay, who is a solutions consultant with Binary Stream. So at this point, Don, I think I will turn it over to you to let you get started.
All right, so I have one obvious question. You can see my screen.
Yes.
And obviously then you can hear my voice. Excellent, perfect. So as you're seeing the title screen here, folks, my name is Don Ramsay. I'm a solutions consultant with Binary Stream, which basically means I'm the guy that's supposed to show you how the product works in your ERP, whether it be GP, NAV, BC, F&O. We work with all the Dynamics 365 products, in particular the ones I've just mentioned. And this product is our first to go through the whole suite. So my job is to try and explain to you what the purpose of this subscription billing suite is and how it can help you. We are going to focus on Business Central, but please, everybody online, understand that the functionality you were about to see in Business Central also exists today in GP, it exists in F&O, it exists in NAV, all right? So there's no reason there to think, oh, why am I listening to this? It's the wrong product. If it's one of those D365 products, you're in the right place. And my partner, Justin McCool, he's the partner account manager. He makes sure everybody gets the right pieces in the puzzle. He makes sure that I do my job by getting on these calls. And you may hear him from time to time putting his 2 cents worth in as well. We try very much to be interactive as we approach these presentations. Now, if I'm going to get my mouse to work here and see if I can go down one screen, basically we're going to follow this kind of a flow. I'm going to do for roughly half the time a bit of a slideshow presentation where I will try and give you an idea of what our business goals are that we're trying to help you with, or what your business goals are, the challenges you might face in accomplishing those goals. Then we'll talk a little bit about capabilities. We typically don't like to refer so much to capabilities, rather how we can solve your problems for you. Of course, that leads to the benefits, and then we'll take a look at the actual demo when we get to that point. I do encourage you to come up with questions. Now, typically on the webinars, we'll wait to the end so that I don't get sidetracked somewhere and end up showing you a third of the product. I will try and shut myself down around 1:45, maybe just a little after, and then whatever questions are there between Justin and myself, we will try to get you the proper answers for those questions. So let's start with business goals for ARC-B, Advanced Recurring Contract Billing, a mainstay of the 3 products that make up our billing suite. So if you look at that subscription billing suite that we have, ARC-B handles those items that, well, maybe it's annual maintenance. And what am I going to do with that? Maybe it's something that's going to be varied each month as far as the billing, usage-based, professional services, or whatever the case might be. We're supposed to try and help you with a product so that you can increase your return on investment. Do more with people that you have. Many of our customers are finding that they're doing a lot of work in spreadsheets, and then they're trying to pump that into the GL transactions once a month, at least to get the numbers on the P&L and on the balance sheet. But we can provide you much more than that because our products are embedded directly into whether it be GP or Business Central or NAV or F&O, and they work as you are working in the product, as you're working in the ERP, you're also producing numbers and reports and statements and so on and so forth. Obviously, that'll help you make better decisions. Obviously, that will help you to identify areas where you're not being very efficient, and therefore you can take steps to eliminate that waste. Now, I've been an accountant for 30-some years, and I've never met an executive team that doesn't want to identify and eliminate waste or inefficiency. And that doesn't mean getting rid of people. That just means allowing the people to be much more effective at what they're doing so they can generate revenue for the company. And of course, the cycle. If you're a company that deals with people, you quote for products, when do you get your cash? How can I make sure that quote to cash time is as efficient and effective as possible? Well, if you have all the information at your fingertips, those business goals are a lot easier to reach. And you see the big bold and the green there. If you know what ASC 606 means, or if you're somehow calling in from overseas and you know what IFRS 15 means, then understand that our ArcB product already has that embedded within it. It can already help you make sure that the numbers that are on the invoice aren't necessarily the same numbers that go on the income statement. And that's a good thing, by the way, not a bad thing. That helps you stay in generally accepted accounting principles compliance. So obviously we get everything embedded in the ERP, and as you're entering invoices or as you're entering contracts, that information is captured in your database, then you have faster access to the right data at the right time. There's no redundancy. There's no extra steps outside. We're probably going to repeat some of this stuff, but understand it's very important to appreciate that your return on investment, even with spending money buying a product like this, will be very, very rapid. We usually measure it in months, not years. And of course, fewer repetitive tasks mean a reduction in data entry errors. Perfectly common sense there. So the sister product, ARED, Advanced Revenue and Expense Deferrals. As you probably know with your ERP, you're going to post your deferrals ahead. The reason that people do not do that is because they can't stand trying to figure out what's happened 6 months down the road, 7 months down the road, when you've got thousands of deferrals posted, maybe hundreds of credit memos and adjustments to those deferrals, some terminations there, and you haven't even got to that month and you're trying to figure out what the heck, what do these numbers mean? Well, that's a nightmare. Business goals with ARED, we want to avoid all that kind of stuff. So, but once again, we can comply with these revenue recognition standards, so you don't have to think about it. You just configure the system, and all this stuff happens automatically in the background. What's that lead to? Well, it leads to more accurate and prompt information. It leads to more accurate forecasting, more accurate reporting, and of course, complete control over when your recognition entries are posted. We do not post ahead, so we help you with your business goals by not messing up future periods. We capture the information in your database. Then we post when you are ready to post, not when the system insists that you do that. And of course, what's really fine about this is because the information is captured but not posted, we can still satisfy the requirements of any auditor that comes in simply by 2 or 3 keystrokes, punching them off a spreadsheet or a hardline report or whatever it is they want, and tell them to go away. And believe me, we have a lot of accountants that just love that aspect of it. No, I don't have to analyze what's in that deferral account. Here's the report to the penny. Go ahead and go play with it. So if I can do that, then I can minimize reconciliation at month end. And if I can do that, I can eliminate a whole lot of effort required to create recognition schedules. As a matter of fact, and again, I'll repeat some of this as we move on, but as a matter of fact, we can make it so that your recognition schedules are created with 0 user input. All they have to do is produce the invoice and the schedule gets created. That's pretty slick from an accounting perspective. You get control of what items are deferred and what are not, but once you've set that up, deferral schedules can be automatic, and that certainly helps with your business goals. So I've given you some good news, but typically what are the types of challenges that people face? Well, we get into a scenario where we've got some really complex billing and revenue recognition schedules. We've got folks that do things such as, well, yeah, I've got a 12-month schedule, but you know what? They've got 90 days to kick off the contract or refuse the contract, back out of the deal. So we don't want to recognize anything for the first 3 months. No problem with us. I got different pricing models. If they buy 50 of these, this is the price. If they buy 150, this is the price. If they buy 200, this is the price. Or you know what? We price it like the internet. Here's the volume. You're going to pay X number of dollars no matter what you use. Oh, well, that's complex. Or how about this? We want to price it or bill it or invoice it or recognize it based on an event that happens. Super Bowl took place last weekend. I wonder how many people recognized advertising expense in the millions of dollars when the Super Bowl was completed. I wonder how many TV stations recognized millions of dollars in revenue when the Super Bowl was completed. Revenue that they couldn't recognize earlier because the event had not happened. It's not a true calendar date, but an event that takes place. Well, we can help you with that too. But that's a challenge within ERPs today to recognize that kind of activity. And how about we just talked about IFRS 15 or ASC 606? Well, they're not the first accounting standards, are they? Accounting standards evolve and change all the time as the powers that be figure out either better ways to aggravate us or, honestly, better ways to make our statements more accurate. And as they do that, our software has to change to adapt to it. Well, that's the advantage of having our software, but that's the challenge you face not having a specific software that deals with those evolving accounting standards. Keep in mind that ERPs are very much like smartphones. No apps, well, you can make a phone call and maybe you can tell the time, but you can't do much else. You get the right apps to suit your business to handle affairs the way you want them to be handled, and man, you're good to go. Well, that's what a product like ours will do to help you deal with revenue and expense recognition, evolving accounting standards, multiple pricing models. Challenges that we put on this list because virtually every one of the customers or potential customers that come to us list these as issues that they're dealing with. How about trying to get from quote to cash with, well, not just your GP or your BC or your NAV or your F&O, but 2 or 3 other products that are mixed in the middle trying to get you there. Now you've got to keep those integrated. You've got to grab information from each of those, compile that information together, and present that as some kind of a consolidated report. That's a challenge that many customers are facing. And if you're keeping this information in a spreadsheet, heaven help you. If you've got 5 or 6, so be it. But we've had customers that have literally thousands of pages in a spreadsheet system where they've got to every single month go through every one of those pages, come up with a big journal entry, and post so they can recognize the revenue and or the expense. Well, how about if we don't have to do that at all? How about if we take 5 minutes, run a process that recognizes all the deferrals that we want recognized for that particular month, or a process that recognizes any invoices from any contracts that we have that want to be identified and invoiced at the end of the month, and we're done. 10 minutes a month, as opposed to one of our customers. I'll give you a real life story here. We had a client who came to us saying, look, we spent 11 days after month end trying to figure out our journal entries for our contracts and for our deferrals. 11 days. Well, heck, I've been an accountant for several decades, and I can tell you, if I'm 11 days into the month, before I can start working on the next month, I may as well shoot myself in the head because I'm beat. I am never going to be sure that I have accurate statements. Now it's less than 11 hours. So the day after month end, they've got things processed simply because they put the right mix in place, the right products to help their ERP work. Very, very powerful to look for ways to solve those redundancy issues, those issues where you're keying things 2 or 3 times and you're manually doing additions and then manually creating journal entries. It's a nightmare. It's logically will create errors for you. No ifs, ands, or buts about it. We had another customer separate from the one that took 11 days that said their challenge was the fact that they're not billing people for everything they should be billing them for. They miss things in their spreadsheets, and they were losing tens of thousands of dollars every month in billable, legitimate invoicing that they could never get back. You just don't invoice somebody for something that happened a year ago. You just don't do it. So anyway, we want to get rid of as much redundant effort. We want to get rid of much manual creation of journal entries to recognize your expenses or your revenues as we possibly can. Trust me, I've worked on both sides of the scale. Working on it manually, it's like you're back to the old Rolodex and the paper ledger. It's just not where you want to go, not when you have the technology and the software that exists today to eliminate those kinds of errors and redundant processes. So capabilities. Don't really like to talk about it as far as capabilities, rather talk about it as far as ways that we can solve your problems for you. But think of some of these steps here. We've got quite a few. We want to get a real-time sales analysis. We want it right now. So I create my contracts. I create my deferral schedules. I can tell you right now what the numbers are because the data is in your database with the rest of the ERP data. Obviously, that leads to the next point. I can forecast future revenue streams, no problem at all. I can eliminate manual rekeying. Nothing worse than doing something 3, 4, 5 times to finally get into your system and then sit back and think, oh, there's no errors. Everything was perfect here. Technical term for that is BS. It just never happens that way. So we want to be able to produce invoices when we're ready. We want to be able to produce financial reports when we need to, not 11 days after month end, but right now, because I know most CFOs that I deal with, right now means, oh, it's February 1st. Where's my financial report? They put them off for a couple of days, but they're looking for it as soon as that month ends, and you want to be able to provide that. So contract management, billing system, deferrals contracting, all integrated with Business Central. And again, I'm going to keep saying this, GP as well, F&O as well, NAV as well. Those ERPs we fully integrate with right now out of the box. So we want to be able to have these renewals take place whenever we want. And again, I've got it in green and bold, ASC 606 and IFRS 15. It may not be an issue for you, but if it is an issue for you, I have no doubt that you've been fretting over it. How the heck do we handle these changing standards, make sure we stay in compliance with these GAAP standards that are adjusting and evolving all the time? This is a solution that can well help you do that, give you that capability without the pain that has to go with it oftentimes. So modifying schedules, whether that be a billing schedule or whether that be a deferral schedule. Keep in mind, I just said to you a few minutes ago, we are not posting deferral schedules into the future on you. That means the information is pliable. We can start moving around. Maybe we look at the schedule after the fact. We've recognized a couple of months, and we want the capability to be able to say, oh, shoot, that should have been a 12-month schedule. That should have been a 24-month schedule. Well, guess what? Absolutely no sweat. Just change it from 12 months to 24 months. The balance of the non-recognized numbers will be adjusted over the balance of whatever makes up the 24 months. All add up the same penny, and now you've got yourself a 24-month schedule instead of a 12. You've had to reverse nothing. You've had to put a credit against nothing. You've just simply gone in, and 2 minutes later, you've had that capability of adjusting those existing schedules to represent what they need to represent for you. So modifying a schedule, huge capability that we provide for you. And of course, recording revenue in the period in which it's earned. Now, I understand as an accountant that if I post a 12-month deferral schedule ahead 12 months, well, yeah, I'm recognizing the revenue. When I get to that month, it'll be there. Okay, that's great, once or twice or 3 times. But what if I do it 1,000 times a month, every month? By the end of the year, I've got 12,000 times in there or better. Now I throw in a bunch of credit memos. Now I throw in a bunch of terminations. Now I throw in a bunch of adjustments, 12-month to 24-month, 12-month to 36-month. I don't know about you, but in my mind, all I see is mess and confusion and numbers that really don't make a lot of sense to me. I can sit down for 2 days and figure them out, but I don't really want to. Now we can say, you know what? I run my process for deferrals at the end of the month, takes me 5 minutes. I run my process for contract invoicing at the end of the month, takes me 5 minutes. See you later. I'm done. And that's all there is to it. So we want to be able to do that, not in a third-party system that's outside of our ERP, but we want to be able to do that within our ERP. So we have the confidence of knowing that these transactions are fully integrated. That's where we want to head with capabilities, and that's what we believe with our subscription billing suite for Dynamics 365 products and GP, we believe we provide you that. And I will get to a demo, and I will give you the highlights of how the product works in just a few minutes. So, summary of our product. ARC-B, Advanced Recurring Contract Billing. That handles your items. Maybe if you think of it from a computer system, I sold you so much hardware, but I also sold you services for configuring that hardware and setting it up. I also sold you internet services, so I'm going to bill you for that. I've also sold you a maintenance contract that's going to be renewed every year. So I'm going to bill you for that, 4 or 5 items, all with different terms. Some are billed monthly as the professional services are charged out. Maybe it's 10 hours this month, 20 hours next month, at whatever the price is. That varies month to month. The maintenance contract might be annual, so you're only going to bill it once a year. The sale of the hardware might be one time only, but you want to track all of that together so you have a complete picture of what that customer bought from you and what the terms of that deal were. That's ARC-B. And also, if the salesman, anxious to close that deal, says, look, the monitor's free. Oh, look, I'm going to give you a 10% discount. Well, guess what GAAP's now saying? Nothing's free. Discounts aren't product. They don't exist. Roll that back into the price of everything, figure out the real value of all those items, and give me a dollar amount that still adds up to the total of the invoice, but doesn't include a free screen, doesn't include, a 10% discount. Well, heck, do you want to do that manually? I don't. I didn't, and I won't. I've got ARC-B. ARED, again, simple. No deferrals posted ahead, but completely reportable, completely analytical, and completely modifiable as you need to modify within proper accounting standards, of course. And then This mirror you haven't heard of yet. It's our term, multi-element revenue allocation, for dealing with ASC 606 and IFRS 15 in the background, so that your salesman can put on the invoice or the contract, this was free, this is a 10% discount, flows through Mira. Mira says, let me reallocate all of this, put the right numbers on the P&L, so the right revenue gets recognized, the right deferral schedule gets created, automatically, zero user intervention required after setup. These modules work separately or they work together. That's what's really powerful about them. We call it the subscription billing suite, but you could just say, hey, you know what? I don't do deferrals. I just need ARC-B. No sweat. Justin can take care of you. Or, you know what? I just need ARED. We just got deferrals. Maybe we do a lot of expense deferrals. Keep that in mind. ARC-B is for revenue. But ARED on a standalone will do revenue, sure, but it will also do expenses, prepaids, and so on and so forth, and track that for you. So that's kept accurate as well and gets recognized as an expense and or revenue when it should be. So these things work together. The other aspect that's very nice is this. It says line level billing. I want you to think for a minute of somebody cutting an invoice with 6 items on it. Each item is deferrable. One is event-based. Super Bowl is going to take place. Maybe something coming up. What's coming up next? NBA playoffs or NHL playoffs, that kind of thing. Or some of the other items will be annual renewal items, so on and so forth. We can handle each and every one of those items on its own type of deferral schedule and post it from the single invoice. Try doing that with the ERPs you're working on today. I can tell you the answer right now. Don't bother trying. You can't do it. Doesn't exist. Line level deferral, straight line, milestone, percentage of completion, and we got more coming down the pipes all the time. As you guys get back to us and say, we'd like to see this functionality as well, we get to working on that functionality too. And as soon as we reasonably can, we get that integrated into the product as well. So I'm not going to get on the last of it, the standalone selling price. That's part of the adjusting for ASC 606 requirements. If you have questions on that, great. But just understand we can handle whatever that 200-page document that deals with ASC 606 tells us to do. We've got it built in for you. So as you see, summary, I will not repeat every one of these line items, but we can handle a multitude of different types of contract billing scenarios. We can put them on the same contract. We can have different start dates, different end dates, different type of frequencies, as you'll see on all of these items, without getting in your way or without forcing you to create multiple contracts to handle that. And of course, we can do very similar activities with deferrals, straight line, milestone, and so on and so forth, and complete integration not only with each other, but with your ERP as well. And of course, the mirror, I didn't spend a lot of time on this because this is kind of one of those things that the average everyday user of the ERP won't have to pay much attention to this, because there's nothing for them to actually do in either GP or NAV or BC or F&O. They just simply process the invoice, process the transaction. This is set up and configured by your administrative folks, by your partner at Velocio. They do all this kind of stuff for you, and it's a set it and forget it kind of a process, unless you add new items, of course, and away you go. But just understand it's built in. We can take away the pain of trying to be compliant with these new accounting standards on your behalf. Summary of the benefits. Reduction of quote to cash. I don't think anybody who's in a business where they're selling to an end user customer would say, yeah, you know what, I don't need ARED to do that. That's okay. I could leave my quote to cash at 6 years. Not a problem. Well, no, that's never what I hear anyway. So we don't want to have multiple systems. I mean, it is nice that some products can pipe into any ERP that's out there. But you know what? We find a lot of our customers are telling us, hey, I don't want to have to teach my people 2 or 3 or 4 different programs. Can't you give me something that's part of my ERP, looks like my ERP, acts like my ERP? Huge benefit as far as reduction in training time and getting people used to the system. And obviously reduced expense, reduced leakage, minimize audit expenses. Hey, when I can provide an auditor with a detailed account of what's in a deferral account in a matter of 5 minutes, that's pretty powerful. And it'll balance to the penny unless somebody has been doing manual entries to that GL account, which should not exist in your deferral accounts. And of course, if you're a small potatoes kind of guy, you know, you don't have to worry too much about auditors. Non-compliance penalties might not be a big deal. But if you're a bigger folk who's actually traded publicly, that might be an issue for you to make sure that you do not miss out on complying, with the ASC 606 or IFRS 15 compliance. Now, goodwill and other intangibles, I'm just going to leave that one alone because in my 30 years of accounting, goodwill never meant a whole lot to me. So you can put whatever you want in that particular line. So I'm going to stop right there with this. Let me give it a couple of seconds, close this off, and let's bring up the actual product, which I see just closed down on me. So give me a second to bring it back up here. Won't take very long. And I'm going to take the next few minutes, I think it's almost the bottom of the hour now, and I'm going to walk through some basic overview of how these two products work together. So bear with me. And, oops, okay. Hopefully that was the right password, looks like it. And let me close, that's GP, we'll close that one off because I did say we're going to start looking at BC for this one. But again, guys, I want to just emphasize that whatever you see me doing in Business Central here, that functionality, the layout and the windows and the pathway to get to the different functionality might be a little different. But the bottom line is that it exists in GP, it exists in NAV, it exists in Business Central, it exists in F&O, and I think we still got an AX 2012 or something. I'm not sure of that one, but we started there anyway. Okay, so I'm bringing mine up in Google here, Chrome, and there it is. So basically what we're looking at is standard Business Central. Now, because of the time limitations here, I've only got about 15 or 20 minutes left to show you this. I am not going to spend a lot of time talking about back-end setup. If there are questions, fantastic, I'll deal with them. But keep in mind that both Justin and myself are always available after the call. We'll have our email addresses, I think it was on the first slide. Feel free to get a hold of us, and we can provide you more in-depth analysis along with Velocio and make sure that you understand completely what's going on with this product. But let's focus on the high end. There's my advanced recurring contract billing. There's my deferrals. Now, keep in mind, I've already said that the ASC 606 part of it is built in. So just understand that that's basic configuration that will automatically take place as you produce invoices or create contracts. So don't worry about that. It's a done deal. You simply list your items, put the standalone price on there, and away you go. But let's look at a contract. When I click on recurring contract billing, what we have done is listed it all right here. In GP, it's a separate module, much like finance or purchasing. It's actually a ARC-B module, an ARED module. Here we've got it built in like this. I'm looking at an actual schedule. And I probably won't have the time today, guys, to spend a lot of hours or minutes, pardon me, talking about reporting or inquiries. But understand we do have a cadre of reports and inquiries pre-built for you. And we give you access to the data structure. So there's not an issue with you designing all the reports that you want, that you need to look at, and go to your heart's content to do that. So here, we'll pick on variable items. So this is a contract. This is ARC-B we're looking at right now, Advanced Recurring Contract Billing. So when this contract pops up, which hopefully won't be too much longer, we're going to see some very standard information. Much of it is default. When you do the configuration for both ARC-B or ARED, you can set up a certain number of defaults and say, look, the schedule is always going to be 12 months unless I change it. The schedule is always going to be 24 months unless I change it. This billing frequency in this contract is always going to be 1 year. That's all just default. You could change it to make it whatever you like. So I've got and that's set up here in the billing schedule group. All that is a bunch of defaults. Helps you with splitting up contracts for reporting. Helps you with splitting up contracts for invoicing, and of course helps you setting up contracts with set defaults if 80% of your time contracts are 1 year, billed monthly, and so on and so forth, okay? This white area, obviously, it's a description of this contract. Even after the contract is in force, been invoiced, ready to go, I can still change the description if for some reason another description comes up that makes more sense to me. My customer number, this customer is the ERP customer. There's no second ledger. There's no subledger that has to be combined with another subledger to give you your receivables numbers. It is a receivables customer in your ERP. Did not reinvent the wheel there. That's all it is. So all the information that you see here is pretty self-explanatory. We can set this contract up to align to the month, meaning if I start the contract February 5th or 6th, I'm going to invoice you for the rest of this month and then full months going forward. Combine that with prorate partial period. The prorate partial period, I misexplained just a little bit in the first one. It aligns it to the month, but it would invoice the balance at the end of the contract. If I also click prorate partial period, it'll move that to the beginning month of the contract. So that first month will get away with all that unbalanced stuff, and from now on, for the duration of the contract, it'll be month to month to month, starting at the 1st, for example, to the 31st or whatever the date might be. I can set it up monthly. This one is September 30th, 2018. My frequency is monthly. Again, the monthly was a default for my schedule group Arc B. I've got 48 months here. So naturally, the contract will end 48 months from September 30th, which is September 29th, 2022. Now, when I type in the billing start date, and I type in the frequency and the number of periods, I don't type in the billing end date. The system is smart enough to do the math. September 30th, 2018 times 48 months is September 29th, 2022. So if I change that to 24 months, it would take 2 years off that. If I change the billing frequency annually, it would readjust everything to annually, and so on and so forth. Very important aspect here, an interval of 1. Some of our clients said to us, look, I want to capture my data every calendar month, but my contracts say that I'm only going to bill my client every 3 months, every quarter. So I could say, yeah, it's a monthly contract, but I'm going to put a 3 in here, and that customer is only going to get invoiced every 3 months. So I can capture the data every month, but I invoice them once a quarter. So that's a default. Typically, that's left at 1, because when I get down here to this section, what you're going to notice down here is every line item on a contract is essentially a mini contract. Very, very powerful mini contract. And let me explain what I mean by that. If I scroll over here, all the way to the right, you see all my dates are in here. I could theoretically say, you know what? That date is wrong. That should have been, let's see if I can change it here manually. That should have been 2025. All right, so let's get out of here. 2022, 2025, I could make this one 2030, I could make this one 2020. Every line item on a contract has its own terms and conditions. You notice, look at the frequency. I've got annual, I've got quarterly, I've got monthly. What could I have? I could have one time, I could have semi-annually, I could have weekly, I could even have daily in here, all on the same contract where the default is monthly. The default is exactly that. It's the default. So I can have any end date I want, as you just saw as I changed that end date. And that helps with my reporting. Because if I've got a contract that I'm saying it's year to year, but my contract actually says with the customer, this is a 5-year contract, I can now say this contract ends 5 years from now. And when I do a forecasting report, it picks up those 5 years. So I get accurate numbers as far as my potential revenue is concerned, because it's going to be based on what I say is an end date here. And just very quickly, if I'm using the milestone where I'm waiting for the Super Bowl or the NHL playoffs or whatever the case might be, the end dates would all be zeros. And as long as those end dates are zeros, the system will never invoice for that line item. Your technician comes back and says, I finished the training as of September 29th, 2019, or February 5th, 2019. You type in February 5th, 2019. When you go to run invoices for February, guess what? That item now gets picked up and now gets invoiced for that professional training that was done, because that guy said the work is over with, time to bill the client. But as long as those are zeros, no mistakes will ever be made. You can forecast the revenue, you can look at what should happen down the road, but until that end date gets pumped in there, you're not going to make the mistake of invoicing a client for work that wasn't done. So obviously start dates, end dates, frequencies, all can be unique to each and every item on a contract. So let's go back to the beginning here. So I've got a service contract here. It's just a standard billing type. If I was to look, go down here and look at it. If I was to look at the standard billing types in a contract, I'm going to find milestone, usage, and standard. So let me explain the easy one first. Whoops, did I just, let me do that here. I go down there so I can show it to you. So if I talk about standard first, standard simply means, look, this is an item. It's in my inventory or my item list. It's got a price attached to it. It's going to be month to month or quarter to quarter, whatever the case might be. I just want you to go ahead and invoice it on a regular cycle. Usage, think professional services. Velocity does some work for you. They might spend 20 hours this month. They might spend 160 hours next month. They're going to bill you accordingly. Common sense. That's usage. Not going to be the same at any given month. Maybe sometimes it's going to be zero for a couple of months, but generally speaking, it's kind of a number that adjusts on a regular basis. That's usage. Milestone, as I just explained, some event has to occur before I can invoice for this particular line. And milestones can be related. I could have a master contract item that says, here's the package deal. You're going to get invoiced 20% when the installation is done, 30% when the training is done, 40% when the implementation is finished with, and whatever the balance is when you go live. And each of those will kick in their percentage of the total revenue when the time comes and when you pump in the end date. So keep in mind the power of this. I've got one item, a service contract in inventory. I've got 3 billing types that I can use for that single item. I don't need to invent 3 different items for that. But let's cross over here and look at pricing method. Look at my pricing method. I've got standard. Well, what does standard mean? Different than standard billing type. A standard pricing method means I get my dollars and cents from the item list in my ERP. So if I've listed service contract at $4,500, that's the price that goes in, $4,500. If I've listed at $5,000, that's the price that goes in. That's great, but sometimes you need flat pricing. You need the ability to say, yeah, I know this item is listed at $5,000, but I made a deal with this customer. It's going to be $4,800. You put flat pricing, you type in $4,800 for this line item on this contract. The price is $4,800. Simple as that. Tiered pricing, very simply, think of volume. I might price 1 to 100 at $1. So if I buy 50, I pay $50. I buy 100, I pay $100. I might price 101 to 200 at 50 cents. Okay, that's great. So if I buy 150, what do I pay? Well, I pay $100 for the first 100, $1 each, and I pay 50 cents for each of the next 50. So I pay, what is it, $125? That's my price. And I can set a price scale that goes from 1 to 100, 101 to 200, 201 to 300, or whatever range I want. No limit on range, no limit on how many ranges. But not only can I do that, I can also say, whoops, sorry about that, guys. We get rid of that. I can also say, look, I want this just to be for certain customers, or I want it to be for a certain area, or a certain territory, or a certain contract, or a certain group of customers. I want it for a certain date range only. So I can have this tiered pricing flow all over the map as far as what prices where and when. So finally, I've got, well, it's right there. I've got flat tier. Flat tier in my part of the world is like the internet. I buy a certain amount of bandwidth and I pay you $50 a month for it. If I use 10% of it, I pay you $50. If I use 90% of it, I pay you $50. If I use 100% of it, I pay you $50. But if I go over, I pay you $50 plus a penalty. Well, I don't want to pay the penalty, so I'm going to buy the next level. I'm going to pay you $75. But guess what? I pay you the $75 whether I use none of it, 10% of it, 80% of it, or 100% of it. I pay you $80 or $75, whatever is the price I just said. That's flat tiered. So it's like a bulk range, not by individual item, but by range. Right? If I buy one certain bandwidth, I pay this much. By the next level of bandwidth, I pay that much, and it doesn't matter how much I use. You can have that, flat tier, standard, all in the same item. Again, greatly eliminating the number of separate items you've got to set up and configure in your item list or in your inventory. And each of those can appear, as you notice, tiered price, same item, tiered, flat tiered, different volumes, very different price endings at the end. So one other thing, this is just the surface. If I want to, I can drill down here, and I've got about 5 to 6 minutes left, so this is my last thing I'm going to show you as far as ARC-B. If I drill down here to look at the actual line item detail, we all need to know detail. In that detail, this is going to tell me that this item has got an annual basis, notice, 2019, 2020, 2021, and it's going to be $5,000 each time it's out there. And when I finally invoice for this item, this box will be checked. The invoice number will show up here, and I can drill back to the invoice in my ERP directly, right from here, and see exactly what was invoiced to this customer. If I've given them some free items, that'll be recorded here. If I've got some comments on the file that I'm using to create this data, I can put those comments there, and away I go. So if this was a 4-year, month to month, I'd have 48 lines here. If it was a 1-year, month to month, I'd have 12 lines here. So again, this is the information that we would use to make sure that your forecast reports are all accurate for you as you move forward. And each of those line items, if I just close this one out, can have its own terms and conditions. So if I go down here to this item right here, let's just go take a quick look at it. Now this is a standard item, line, functions, and then I'm going to get on to deferrals, guys, very quickly for you after this. And display billing details. So every single line item on a contract has its own terms, its own conditions, its own frequencies, its own start and end dates, and so on and so forth. So it's all, as you can see, very different term here for this particular contract. Runs up to 2022, but on a monthly basis. My quantity is all fixed at 220, but I can also have the variable quantity as well. If you think of the usage items I explained to you a few minutes ago, like the training items here. Go back to my functions. And once that functions pops up here, hopefully, oops, I did it again, my bad, sorry guys. That was my fault. Oh, there it comes. So you notice 160 that month, 140 this month, and so on and so forth. So the price could change, the quantity could change, and so on and so forth. So hopefully that gives you a pretty good idea of the complexity that exists in the billing schedule, but yet the simplicity that exists in setting it up and configuring it and to getting it to do what you want. So let's pop over quickly for the next, say, 5 to 7 minutes, and let's take a look at a deferral schedule. Now, hopefully, folks, all of you on the call will understand that we're looking at this at a very, very rapid and high level. We can obviously, along with, we'll also get into a lot more detail with you to make sure that you understand the nuances. So don't worry about that aspect of it. That would be something that could come along if you really want to take a hard look at how this works. So here's a deferral schedule that was created for us automatically. We don't create deferral schedules manually. They come, in the case of sales, from invoices, all right? You could do it from journal entries. You could do it from purchase orders, from sales orders, from receivables documents, from purchasing documents. You can create the schedules from any of those options. And as I show you the header here, a lot of detail, most of it's pretty boring. Here's my deferral account on the balance sheet. Here's where I'm going to recognize revenue or discounts or cost of goods sold, and so on and so forth. And this is the type of deferral schedule it is. It's a straight line, 12-month monthly, so nothing rocket science here. And there it is. So there's my actual schedule. There's this line, this line, this line. This has been recognized already. There's the journal number that it went to. So it's been recognized. The power of this means that it can't be recognized twice. Can't make a mistake. Once you've posted the journal, it's done. It's over. You've got that revenue and or expense where it belongs. But all of this information is all sitting in tables in your database, fully managed by ARED, fully reportable, so I can do future analysis. What am I going to recognize by the end of the calendar year? What am I going to recognize by the end of the fiscal year? And so on and so forth. And it will automatically announce that these have been recognized and these are to be recognized. And it'll give you where they are on the balance sheet, what the contract was, who the customer was, what the line item was. All that detail is captured, so you have absolutely complete, detailed understanding and analysis of what's happening in a deferral schedule. And just in case I haven't said it enough, these deferral schedules are created automatically in the background. You post an invoice, for example, post a sales invoice, and an item on that sales invoice is deferrable. You've set it up to be deferrable over 12 months, monthly, done, over with. You set the next item up to be event-based. It's going to only get recognized when something happens. It would get set up here on this page without an end date, pump the end date in, it's recognizable, run your process, and that particular schedule now gets recognized. So hopefully you can understand that this makes it a lot more powerful than trying to put all this information into a spreadsheet, rifling through it at the end of the month, trying to compile a journal entry, frantically going through that journal entry to verify that the numbers are correct, and it does indeed add up to what you think it should. and posting that journal entry and hoping to, you know what, that the CFO doesn't come back after you and say, where the heck did you get these numbers from? They don't make any sense. That worry goes away because everything's done automatically. It's all handled by the software itself. And all you've got to do is come in here and take a look at the individual schedules. And by the way, if I wanted the schedule to be changed, just to give you an idea of how different it is from our standard processing, what have I got here? 2019. I could possibly go up here, click on actions, look at accounting, modify it. Okay, so I've got the schedule. Let it come up here. Maybe I want to modify it. I can turn around and I can say, yeah, it should be straight line. Maybe it should be 12-month monthly. Maybe I can just put this end date in here and I can say 2019. Oops, it says a recalculation date. I didn't mean that. I meant end date deferral. Sorry, my bad. Now it's going to give me an error there. Yeah, my bad. Sorry, guys. Hold on. Then revert that change. So I don't make that change. Let's try this one up here. Schedule end date. Let's see if I can do it. See if I haven't got it locked out. So it's now processing, as you can see. Now if I go down to my schedule, it's now 2020. And all the numbers have been adjusted. And you notice on one schedule, if I just scroll this down a little bit, you notice I've got my discount amount. I've got my actual amount that's net. I got my discount and I got my cost of goods sold. So even if you were deferring a physical item and you actually had a cost of goods sold you wanted to track, you could track all that in one schedule and the math was all redone. You notice 291 was the original number. Now it's roughly half of that with the balance, of course, these first two entries off the books, and away you go. And there's the schedule in place. So that, guys, is a very high level of our subscription billing suite. Hopefully that's provided you with some information to give you an idea as to how the product works. So I will open it back up to questions and any other comments that need to be made from either Justin or our host.
All right. Well, thank you, Don. That was great. Appreciate that. And we do have a couple questions here. And let me repeat, if I could, if you might have came into our session here a couple minutes late. While we'll fire up these questions, if you do have any additional questions, please just go ahead and use those, submit those through the GoToWebinar question box there on your panel. And please go ahead and do that over the next couple minutes here. And I do have a couple here for you, Don and Justin. Let me start with this one. Is your product fully integrated with BC?
Good question. Absolutely and completely. With all of our products for Dynamics ERPs, we write in the code of the ERP. We use the whatever Microsoft tells us to use so that we do not have to pipe in any information in from outside. We're fully integrated. So as you do the work, it's in your ERP database.
Okay, great. We got a couple more, I think, kind of related right around that area. Can we import information into and out of your product easily?
Actually, quite easily. We work very well with products like, if you think in GP, eConnect or Smart Connect. eConnect comes with it, of course, but Smart Connect from E1 Software. We try to work with all these little products like Scribe so that you can get your information back and forth. Or in the case of Business Central, web services, we make sure that we give you complete access not only to getting information into our product, but also for taking information back out from our product if you need to get it back, say, into a CRM or something to that effect. Absolutely.
Okay, perfect. And another one I think related there is, can we build our own reports and combine the data with BC data easily?
Good question. As you could probably imagine, there's no way we are going to anticipate 100% of the reports that people might need. So we try to go the old Prorate principle, the 80-20 rule. We think we might get 80%, but there's always something you need. So our table structure is an open book to you folks. So the Velocity folks, for example, could come to us and say, hey, tell me where all these tables are, what fields I need to use, because I want to build this kind of report. We're happy to give that information to you. We do not want to be the builder of reports. That's not our business. So we gladly will give you access to that table structure so you can build your own.
All right, great. And again, I'll mention if you've got any questions, please submit those into the question box. We had one last one just come up here around deferrals. With the deferral portion, do you post ahead to future periods?
No, Let me get rid of that. No, we definitely do not do that. We have never heard anything but complaints from every single accountant we've ever demoed for. That's one of the reasons they come to us. They don't want to mess up their future periods. So we take the information for future postings. We save it in your database. We allow you to report on it so you can get an accurate revenue forecast, an accurate expense forecast, but you get to post it when you are ready. Typically, it's a once-a-month process that takes about 5 minutes.
Okay, great. That looks like it wraps up our questions. So with that, I want to thank Don and Justin here for coming on board with us today and giving us this overview. Certainly, all the attendees out there, if as Don mentioned, this was certainly kind of a high-level overview. And if you've got any further questions, would like to take a closer look, please reach out to your CSM. They will get in touch with Justin and Don and take care of any additional information you might need. So again, I want to thank you all for joining us, and have a great rest of your day. Thank you.
Thanks, guys.
Thanks, Rocky. Thanks, guys.